In a move that's sending shockwaves across global financial markets, China has started selling off huge amounts of U.S. assets, and the effects are already being felt. Over the past several weeks, China has been aggressively dumping U.S. Treasury bonds and other dollar-based holdings, creating fear and uncertainty among investors worldwide. This isn't just a routine financial move. It's a strong signal that China no longer wants to rely on the U.S. economy, and the consequences are beginning to show. The numbers are alarming. Experts believe China has sold off more than $100 billion in U.S. assets in a very short time. While there hasn't been an official announcement from Beijing, the proof is visible in market data. Bond yields are climbing, the U.S. dollar is losing strength, and global investors are starting to follow China's lead. They're worried about being caught in the middle of this economic shakeup. As a result, the U.S. dollar, once known as the world's most reliable and stable currency, is now facing major pressure. Countries and businesses that used to hold large amounts of U.S. dollars are now looking at other options, including the euro, the Chinese yuan, and even digital currencies. For the U.S., this is a huge deal. It means losing one of its strongest tools, its power and influence over global finance. So why is this all happening now? According to many economists, it's a direct response to the growing tensions between the United States and China. From trade disputes to restrictions on technology to economic sanctions, the relationship between the two countries has worsened quickly. Now, China is fighting back in a way that could hit the U.S. where it hurts most, its finances. By pulling back from U.S. assets, China is doing more than just protecting itself from future sanctions. It's also striking a blow to America's standing in the world economy. And while this strategy helps China avoid risks tied to the U.S., it leaves America in a weaker position. At the same time, ordinary Americans are starting to feel the impact. A weaker dollar means that imported goods are more expensive. From gas to gadgets to groceries, prices are creeping up again. Inflation is on the rise, and families across the country are feeling the pinch. Uncertainty about the U.S. economy is causing many investors to move their money overseas in search of stability. This story goes beyond finance. It's about global power. China is making it clear that it wants to help create a new world economic system, one where the U.S. is not the only leader. China is strengthening its ties with countries like Russia, Brazil, and Saudi Arabia. It's also pushing for trade agreements that don't use the U.S. dollar at all. What used to seem impossible is now starting to look real, the beginning of a world where the U.S. dollar is no longer king. Leaders in Washington are scrambling to come up with a plan, but trust in the American financial system has already taken a hit. Wall Street is on edge, global markets are jittery, and financial experts are warning that if this trend keeps going, the damage could last for years. With investors pulling back, China cutting ties, and the dollar falling, this is more than just another news headline. It's a serious warning. Make sure to like this video and subscribe to our channel. Don't forget to hit the notification bell so you never miss an update. Thanks for watching, and we'll see you in the next one.